China's economic growth is set to fall behind the rest of Asia for the first time since 1990.
The crisis it is facing is kind of the reckoning with some of the challenges of the last few years.
The world's second largest economy reopened this year, but hopes for a strong, sustained rebound are fading fast.
China, the world's second largest country in terms of economy but still struggling. Hi everyone, welcome to our channel, Worldwide Interests. If we talk about China is currently facing a series of crises with three major issues occurring simultaneously: the real estate crisis, banking crisis, and credit crisis. Today, we'll delve into the reasons behind the continuous fall in the Chinese economy and discuss the lessons that other countries can learn from this situation. First of all, let's look at the last data. Without any doubt, China has long been known for its remarkable economic growth, but recently, it has been facing a slowdown in its GDP growth rate. According to the World Bank, the GDP growth rate of China fell from 6% in 2019 to 2.2% in 2020 due to the COVID-19 pandemic. This decline continued into 2021 with a growth rate of only 0.6% in the first quarter. Let's look into a banking sector's vulnerability.
Now, this, remember, in China is a rare public demonstration. At least about 1,000 depositors gathered in front of the Zhengzhou sub-branch of the People's Bank of China to voice their extreme anger against the alleged charge of corruption.
5 banks have already crashed. In an article posted by Reuters, China Construction Bank and Bank of China reported a 68% and 20% increase in bad real estate debt in the first half of this year on Tuesday in exchange filings. Meanwhile, the world's largest commercial lender by assets, Industrial and Commercial Bank of China, posted a 15% rise in real estate sector soured debt over the same period. Affected by the epidemic and the downward pressure on the economy, the current operating environment of banks is complex and grim, Vice President Wang Jingwu of ICBC said at a press conference after the release of results. Not only this, but small and medium-sized enterprises, known as SMEs, which contribute around 60% of Chinese GDP, are also struggling for cash. The Chinese economy recorded a growth rate of just 2.99% in 2022. So, what are the challenges seen in the Chinese market? However, despite these measures, 3 major problems emerged in the Chinese market. The first was the target deficit problem faced by local Chinese governments, hindering their ability to borrow and achieve economic growth targets. The second problem was the strict restrictions placed on banks, limiting their lending rates and the amount of loans they could offer. This created a lose-lose situation for banks, local governments, and borrowers. Lastly, the rise of shadow banking in China became a significant concern. Shadow banking refers to unregulated financial intermediaries that provide loans outside the traditional banking system. This created risks and instability within the Chinese economy. What lessons can other countries learn from this? First of all, it's important to avoid dependence on other countries for growth. Let's have a look to real instance from the history. Venezuela is a country that is heavily reliant on oil exports. In 2019, oil exports accounted for 95% of Venezuela's export earnings. This dependence on oil has made Venezuela vulnerable to fluctuations in the global oil market. In a study by Investopedia, Venezuela was giving away over 200,000 barrels of oil per day, half of which goes to Cuba, reducing the amount it had available to export for profit. When oil prices were over $100, Venezuela received enough margin from exporting oil that the lower volume doesn't harm its economy. When oil dropped significantly below that price level, the country's margins were squeezed to the point where it did not meet its spending, resulting in ballooning debt. Venezuelan government's failure to diversify the economy and reduce its dependence on oil has had a devastating impact on the country. Millions of Venezuelans have fled the country due to the economic crisis, and the country is now facing a humanitarian crisis. So, if a country wants to stable in economical terms, then it is important to focus on maintaining a strong banking system and implementing regulations to prevent excessive risk-taking. The continuous fall in the Chinese economy can be attributed to a combination of various factors discussed in our whole video. All countries can learn from these lessons and ensure a more sustainable and stable economic environment.
Worldwide Interests. Every interest. Follow here. Subscribe for interesting and full of knowledge videos.